Hi, ladies and gentlemen. I want to share with you a new spread today. Interesting one in the agriculturals. This is a spread between the ZM, which is the bean meal, soybean meal, and then the ZL, which is soybean oil. Now, oddly enough, these two are not entirely correlated. They do move opposites at many times. Um, and it's something you need to be aware of, but you can also benefit from that divergence as well, those differences. So here's a trade I took today, and really poor entry. I really don't know what I was doing. I guess made a mistake. I went short right when this was turning down, and you can see my short arrow right here. This is in the ZM, which is the bean meal chart, is up top. And I went short right there, and it was green. Green dots, my cycle dots, are showing a buy signal. So they're showing an oversold condition. I was expecting the spread to continue down, and the reason why I was expecting that is because we have such a strong, you can see the red forecast dots are below the yellow line. So red below, which means we're below the yellow line, shows historically this spread likes to be below the yellow line during this time period. So that's an average there. So I went short there, and I don't know what I was thinking, but I did hold on to the spread that entire time. The 9:30 market opened here, considered shorting as I exceeded this upper red line. I didn't. I held on, and the market just played out beautifully and went down in my direction. So it was a little risky. Honestly, I should have gotten out at about $200 loss here, re-entered on a break below this level. Ideally, um, I like to look at a reversal from a strong low. So this is a strong low because we pushed to new highs. And when we broke through that, that's a great sell signal right there. So I would have avoided a lot of heat. It was about $1,000 drawdown here. I was holding on to it. Again, with my expectation dots below here, I felt confident. So I went short here, and I got out. Now, some people are wondering, well, on a spread, can you leg in and leg out? Meaning, can you partially exit? Can you leg out of the position? And yeah, you definitely could have. That's not a problem. Spreads aren't a single entity. They are two positions. So you can exit one position and hold on to the other position for a better exit. And I'll show you that in a minute. But what I'm showing too here is my target was the yellow line, and look, we actually did hit it very nicely. So had I held on to it, I would have probably been, well, I would have been in, I think I'm looking at about $600 in profit here. So there was $600 between this green dot and the yellow line. But here's the interesting thing. Um, Actually, let me try something here. No, that won't help. Okay, never mind. Uh, okay, so we'll turn that off. No more strategy trades. So I had my target at about $600 in equity. So this is what I did. I did a partial exit. So let's go to the bean meal chart. Now, when I was short that spread, I was short the bean meal contract. I was short two of these. And this is where we entered. This was right at, what time is that? That's 7:41. I went short. And look at that, what a horrible time to go short, right? I went short right here, and bean meal moved up. The 9:30 open came along right here. 9:30 open right there. Bean meal moved up into my overbought area, which is this red area. But bean meal tanked. It tanked, and it went all the way down to my round number level at 369 here in bean meal. So I decided to exit. I exited just the bean meal leg, and I exited and I made on two contracts, I was up 260 bucks. So I took off $260. So that was a $260 profit right in my account right there. Now I held on to bean oil, and I held on to bean oil for a little bit longer. Here are my two P&L boxes, and this is what I ended up doing. Bean oil, I got out right here. This is where we went long at about 741. Yeah, 741. We went long. I found we were in the spread in this entire time. Found good support here. Went on the open. The open occurred at 9:30, which is right here. We were at the low of the day, basically. At the open, moved up, and I held on to it. So I exited bean meal. This exit occurred at 10:07. I exited, this is 10:07, right about here. Let's see, 10:07 was right here. But I saw good support at the round number of 45, and I held on to my long. I was long 3 bean oils, BZLs. I found good support at this. I said, I'm going to hold on to this as a long. So I was naked. I went long on this one, and I ended up getting 2 contracts off at just 12 bucks each, so 24 bucks in the pocket. And then I held my last contract long for 114. So that is like what, 140. So I was up on the entire position. I exited on this legging out. I was up 260 from the bean meal, 114 from the one contract, so that's 374, and then 24 is 390. So I ended up with a positive 390 on the entire position, summing up all of my exits. Again, had I held on to it, I was short from here down to here. That would have been a $600 gain, but getting a 390 isn't so bad either. So I was happy with that. So I had a great trade today. So that's my summary. Again, you don't have to be a rocket scientist to do this. It's honestly pretty simple. Um, I made a foolish entry, a bad entry, bad timing, and I didn't exit, which I should have done a $200 stop loss, really. Um, but I held on, and again, the prediction was down here, and it came through. So there is some validity to the spread trading concept. You don't have to be perfect on your entries. You can make 390 on this trade and do that all day long. Had I sold it up here where I was targeting to re-entry a little bit above here, but from here down to here is 2, 4, 6, 8, 10, 12, 14. This is a $1,600 move from the top to the yellow line. So that is not too shabby, $1,600 move. All right, thanks guys. Let me know if you have any questions.